news, and we're going to start off talking about the consumer. The consumer is someone I have been studying for 30 years, and the beauty of studying the consumer is you can kind of see shifts in the market. So if you've been watching the channel for any length of time, you know that I've been saying the consumer is going to pull back. In the housing market, that has led me to call it a buyer's market. But I have believed that the consumer is going to pull back for the second half of 2024 as we have an election, as we had a lot of negativity, as we just have noise in the system. And we are starting to see some economic numbers that say just that. For example, we got a report yesterday afternoon talking about consumer credit. Consumer credit growth has slowed to 8.9 billion. That's a big number, but slowed dramatically from the month before. And it was actually estimated to grow 11.8 billion. So it is growing less than expected. That just means, quite simply, consumer demand is falling. Falling for houses, cars, anything that would get a loan. Buyers are simply sitting out, right? This is something that doesn't happen a lot. The general mass of the U.S. consumer is taking a time out, a deep breath, as we figure out what is coming in 2025. However, the next step of this, I believe, will be banks, credit cards, competing for business. As consumers pull back, banks lose money, financial institutions lose money, and they can start being more competitive. What does that mean? Remember that gap or that spread between the 10-year note and the 30-year mortgage, for example, is historically high. It had got as high as 307. I think it's currently sitting at 265. Historical average, again, is 180. I believe as we play this game of dominoes out, you're going to see more that spread come in as banks compete. Probably most importantly to me, a sure sign that the consumer is pulling back is credit cards. They call it a revolving credit. Credit card usage was down 1.2% in August. The U.S. consumer has put the credit card in their pocket. Again, this is just a sign that the consumer is truly pulling back, and pulling back in lots of different ways. For example, we got our first earnings report today. Earnings report came out from PepsiCo. Pepsi's revenue down. They missed. Pepsi's forecast down. They missed. So even for soda and chips and things of that nature, the consumers are keeping their credit card in their pocket, and they're not buying. It is going to be very, very interesting to me what is going on with high-end consumers. To me, I think Lululemon, I think RH, these kind of providers who are clearly focused on the discretionary high-end consumer, what are their earnings going to look like? Also, of course, I'm very concerned or interested in the banks that start to report Friday. I think it's JP Morgan, Wells Fargo. What kind of reserves for bad debt? Have they used the reserves for bad debt? Loan origination, net interest margin? We could just see the system start to slow down. So yes, looks like the consumers are pulling back as we expected. Again, you can look at credit card usage and an early earnings report from Pepsi as validation. We're kind of over the target, which is nice to see. Small business optimism survey. This is a survey that comes out from the NFIB. What is going on with small business? Small business, if you don't know, is really the backbone of the U.S. economy. The small business arena makes up a very large percentage of employment and revenue and the like. It's not all the Fortune 500. It looks like the small business survey trending in the right direction, but coming from a very, very depressed level. Previous reading was 91.2, estimated to go up to 92. Didn't quite make it, only went up to 91.5. Those numbers mean nothing to you. So what I will tell you is the historical average is 98. We have been below the historical average for 16 months, but it does look like the trend is intact and the small business is getting more positive. Plans to hire, up. Share of firms seeing historically higher prices, up. Percent expecting a better economy, up. Uncertainty is at the highest reading ever. This is exactly why I think we are having this economic pause, air pocket, because we are just uncertain. In my 30 years of studying the consumer, the economy, this is the most uncertain, probably since the day I remember sitting on my couch watching CNBC when those folks were moving their boxes. I think that was from Lehman Brothers. I think it was Lehman Brothers. That day was very uncertain, but it was a very short window because we got TARP and some other things thereafter. It was clear, they were coming in to quote unquote fix it. We have this 5-month window. Consumers just like, I'm out, I'm done. I am not participating. So you're definitely seeing that. Again, in the NFIB Small Business Optimism Survey, the highest reading, and this goes all the way back to 1974. So that includes the 80s, the early 80s, which was a wild time. Uncertainty is the highest reading ever in the survey. All right, let's talk about some Fed speeches. We got Fed President Neil Kashkari. He's out there talking about recent rent declines, gives us confidence that the shelter inflation will fall. Absolutely, you and I have been talking about it. In fact, I was one of the first persons to report a couple of months ago. If you threw out the 12-month rolling calculation and used actuals, that CPI headline would be below 2 today. It would be below 2. I think the last reading in CPI had shelter inflation at 5.6 or 5.5%. Nobody thinks shelter inflation is running at 5.5% today. So yes, there is no question. If you make that one little change, we have inflation already below 2%. Not seeing signs of inflation rebounding. Neil, let's keep our fingers crossed because we need to be on the lookout for that. Labor market looks strong and we want to keep it that way. I think this was the big reason we got the 50 basis point cut. They saw a job market that was starting to crack and crumble. They wanted to get ahead of it. They knew they were restrictive and they hit us with a jumbo 50 basis point cut. The balance of the risks no longer tilts towards inflation. It tilts towards labor. And the neutral rate, this is a big deal. This is a big deal. Pay attention. Neil believes that the neutral, or sometimes called R star, is 3%. Today we're at 4 3/4. So if neutral is 3 and we are 4 3/4, we are still very restrictive. And if they want to get to neutral, they got a lot of work to do. Roughly speaking, that is 7 rate cuts. We could get 7 in a row. We could get a couple more jumbos. You know the drill, but knowing where neutral is important. And he believes it is at 3%. How about John Williams? John Williams, another Fed president, out this morning saying that 50 basis point cut in September was the right move, And he said that this was an important part. It is still the right move today. There's a lot of people saying that the Fed made a mistake. The Fed was overreacted, this, that, the other. John Williams basically said, no, even with the jobs data, even with all the positive economic data, it was still a right move to go 50. Why? Again, they want to get to neutral, and they know that they are really restrictive. If neutral's 3, and before the rate cut, they were 5 1/4, that is wildly restrictive. So again, a lot of Fed speeches this week. We got to pay attention. We got to see, does everybody agree it's 3? I think Michelle Bowman thinks R star is 4. That's a big delta that we're going to have to uncover. A lot of Fed criticism out there. We got Larry Summers. Larry Summers saying the Fed made a mistake going 50. Stanley Druckenmiller, I hope the Fed is not trapped by forward guidance. What does Stanley mean by that? If you look at the SOP, the statement of projections by the Fed, they have painted a very clear picture of what's coming. 2 more rate cuts in 24. 4 to 6 rate cuts in 25. What Stanley is basically saying is, hey, I hope if the data changes, I hope they can change their opinion. Again, Stanley is hoping that the Fed is not trapped by forward guidance. And then there's Torsten Slock, chief economist, Apollo Group. The data continues to be robust. There are no need for Fed rate cuts. Again, folks, there's a lot going on under the system. Is the economy strong or not? Is the data a mess or not? At the end, folks, again, I think the consumer is pulling back. We are going to see many more retailers report over the next 2 to 3 weeks. It'll be very interesting if they are similar to Pepsi, where they miss revenue in the quarter they're reporting and they cut guidance. Let's talk about mortgage rates. Mortgage rates are up, up, up. Mortgage rates hit 6.62% yesterday. They will likely be higher today. It is wild to think about. The day before the Fed rate cut, mortgage rates were 6.11. They're now over 6.6, heading towards 6.7. What is going on? The yield curve, I believe, is still inverted, which means the 2-year is more expensive than the 10. I did not check this morning. That was yesterday's data. I should have checked this morning and didn't, so I could be wrong. Remember, folks, if you are part of my school community, you have a huge, huge opportunity today at 9 a.m. or about an hour and 20 minutes. You are going to be introduced to a tool called PropStream. This is a tool that folks like Jason Pritchard, Omar, Adrian use to really be like a metal detector to investigate deals, investigate opportunities. And I use PropStream to figure out which properties I can write super aggressive, disrespectful offers. Again, what I use PropStream for is, hey, there's a property that's been on the market for 45 days. What is the equity? What is the debt? How aggressive could I be? Why do I do that? Because it's very unlikely a seller is going to bring cash to closing. But if they have huge equity or they own it free and clear, sometimes their motivation to sell is really high and they just want to be done. So PropStream helps me do that and help write better offers. I want to congratulate and thank a new member of school, Manny. Manny, thank you very much for joining, being part. Make sure to introduce yourself, be active, take the boot camps, all of that stuff. Manny, thank you very much for joining. Let's talk about one thing. There was a school question yesterday I'll wrap up with is, how do you write lots of offers? Right? Again, this individual is looking at the MLS. They want to write up lots of disrespectful offers. How do you do that without pissing off agents? Again, remember, these are on market. So I do a couple of things. First, I make it very clear to my buyer's brokers or buyer's agents, in this case, who I am, what I do, and I let them know what's coming, right? I am going to write lots of offers. They are all going to be below market. I will know my numbers. I will tell you why I chose that number. But realize, if you're working with me, you may have to write lots of offers. Let me give you an example of an agent I used in Fresno. His name is Scott. Scott and I worked together over the summer of 2019, I think. He was a new agent working with a friend of mine, so I gave him a shot. Scott wrote 83 offers. 83 offers for me over about a 90-day window before we got our first deal. Now, again, Scott did the right thing. He set up a Zuber template because all my stuff is the same. Address is different. Price is different. All of that. Everything else was the same. Scott got to a point where he could write up an offer in 3 minutes because he used a template. Second, what else do? I go to the listing agents. If I know the listing agent, I call them. If I don't have a buyer's agent helping me, I call the listing agent and I say, hey, this is who I am. This is what I do. I found your property. It's been listed. My research says this. I can only pay that. Sometimes that helps. So again, lots and lots of stuff that you could do. Just be authentic. Again, writing offers, following up, all of that stuff. It is certainly possible. Well, folks, I hope you have an amazing day. This is the Daily Financial News. Like, subscribe, comment. 141 of you are joining me live. I just want to thank you. Joining me live is such a kick. I love all the good mornings and all of you interacting. It means a lot to me that you are here. 24 of you have taken the time to give me a thumbs up. Thank you, thank you, thank you. Guys, take care. Like, subscribe, comment, become part of the family. Take care, everyone. Bye.